Like, I loved skateboarding, but I never thought I was going to be a pro skateboarder. I mean, I live a pretty good life from an income standpoint. Knowing what I know now, I would have been miserable. But I think that paired with the idea that if you didn't go to college, you weren't going to be successful. If there's somebody that putting into my life you feel is important, will you remind me every day that that is the priority? No one will build anything of substance without going all in. What am I doing here? Am I here to win? Okay, then I'm going to play the game.
What's going on, everyone? Welcome to another episode of the Commercial Real Estate Blueprint Podcast. I'm extremely excited for today's guest. It's hard to describe him in, one little introduction because he's done a bazillion different things, but he's done them all successfully. So he's been a pro skateboarder. He's built and exited a very large brewery. He's a city council member. He's a social media influencer. He's got, I think probably well over 1 million followers at this point. He's a father. He's a husband. I know he has 4 kids, and he's just doing it all. So I want to talk to him a lot about, how he's managing all of that, but also, we're super excited he's here and to hear, just some of the wisdom and knowledge he's acquired over the last several years. So thank you so much for coming on the show.
Thanks for having me, guys. And I have to figure out a way to shorten the, resume or introduction. I have not mastered how to do it well yet.
No, I don't think you need to shorten it. I think, I like Jesse Itzler a lot. I'm sure you probably come across him and he talks about having like a life resume. And I think your life resume is awesome. So
I appreciate that.
Yeah. So, aside from that introduction, just if you want to give a little background on yourself for our audience, that'd be great.
All right. So growing up as a kid in Southern California, I discovered skateboarding and I started to notice that I have some obsessive kind of behavioral traits. And so I picked up a skateboard. It's all I ever wanted to do. I did that for about 6 years before I was getting close to graduating high school and had to make a life decision on if I was going to go to college and for what. But I just wasn't ready to stop skating. So I figured out a way to get companies to give me free products and eventually pay me. 2 years later, I became a pro skateboarder, and that lasted for a little bit over a decade. I absolutely loved it because I got to travel the world and do what I love for a career. But I had this fear that set in at an early age that I didn't know how I was going to make money after my career ended. So with some guidance and focus, I really started getting disciplined on creating financial freedom. I kind of went all in on maximizing dollars to get them, invested. Down the road, I discovered storage. I started making investments passively as an LP in some storage units. And then after that, I started my first company that you mentioned. It was called St. Archer. And then in 2015, we sold it to Miller Coors. And then after that, I started my current business, which is Commune Capital. We focus on storage and multifamily. And then in 22, I started getting involved locally. I ran for city council and I'm on my third of a 4-year term, and I'm currently the mayor pro tem. And then I've been married 15 years. I have 4 children, and I actually we're expecting a 5th. So I have number 5 coming in February. Wow. So life is busy, life is full, and I feel very blessed to have gotten to this point with everything so far that's by and large worked out. A lot of challenges, but I'm further along than I ever thought I'd be.
That's incredible. Yeah, you've got an incredible resume, and that's so cool that you have one coming in February. I haven't said this yet, but by the time this podcast comes out, I'll probably have told the world, but yeah, we're expecting our 4th in February as well.
Yes. I love that. So good.
Do you know what you're having?
We do. We're having a boy. So my final spread is going to be 3 girls and 2 boys.
Awesome. Yeah. I have a daughter, 2 sons, and then this 4th one's going to be a girl. So
yes,
2 and 2. Yeah.
Yes, that's awesome. Good for you. Congrats.
Yeah. Thank you, and congrats to you too. So I want to talk a little bit about the pro skateboarding. I think everybody when they're growing up goes through a skateboarding phase. I know I did. I was never any good at it, but what does it take? I mean, I know it's extremely competitive, and also skateboarding is extremely difficult. How did you, I guess, were you just skateboarding all the time and you got really good and then you sent your stuff off to sponsors and that's how you got sponsored and then made it to the pros? Or walk us through that a little bit.
Yeah, a little bit. The first thing is you typically need to be a pretty obsessive person to get good at skateboarding because it takes so long to even get to the point of doing your first trick. And so I started getting pretty good. The big thing for me was there was this new era of the way skateboarding was done. And I just had happened to be part of that kind of generation. And so, what it was in the past was a little bit more raw, a little bit all over the place. You just went out and skated and there was a camera guy and maybe he got some clips of you. And it was kind of not a lot of infrastructure to skateboarding. My generation, it was all about getting clips, right? Getting photos and clips in the movies. And we turned that into a machine. So if, pros historically put out one video part of themselves every 5 years, my generation was doing a video part every 6 months. It was just, we are here and we're here at scale. And so I got to ride that wave. And then, social media hit, and that was the next generation that changed it after us.
Yeah, I can imagine it being massively different now, going from being, once every, you said 6 years or 6 months?
We were putting out a lot of content. Probably the best way to describe it is there was no money in skateboarding when I started. And then it started blowing up. And then you started seeing a lot of corporations come in and you saw like a real industry built around it. And the way we skated also reflected what was happening.
That's so cool. It seems like, it seems like you took that and then you went on into so when you did St. Archer, were you still skateboarding at the time, or was that like a side hustle that you made it your main thing, or did you go straight into that full time?
Good question. It was on the tail end of my career. So how I was trying to plan it was my career was ending. I still had a few years left on a contract. And so I figured, okay, if I start the next thing now, there's a little bit less risk because I'm still being supported by income from sponsors. And so that's how I went about it. I was probably dedicating 50% of my time, maybe even a little bit more, on the company, and then the remainder on my skate career.
That's so cool.
Yeah, so it sounded like at the beginning, when you left high school, you're like, I'm passionate about skateboarding, I'm obsessed, wanted to find a way to make that work for you to be able to survive. And, sponsors was the answers. But you mentioned having a fear in there of like knowing that you couldn't skateboard for forever and you needed something to supplement that. I'm curious, where did that fear come from?
That's such a good question. Like, I loved skateboarding, but I never thought I was going to be a pro skateboarder. If you would have asked me at 12 years old, I would have told you I was going to be an attorney. Like I was very clear on that. I'm going to be an attorney. I'm going to go to, I'm going to go to law school. I'm going to live a pretty good life from an income standpoint. Knowing what I know now, I would have been miserable. But I think that paired with the idea that if you didn't go to college, you weren't going to be successful. And if you grew up in the 80s and 90s, you absolutely believe that. I did. And so I think when I didn't go to college, I was kind of concerned that I was saying no to what I always thought my lifestyle would be. And then the fear came in. And the fear drove action out of me. I don't typically operate these days out of fear, but gosh, from 20 to 30, that was probably the main driving factor for me.
I think that's important to talk about too, because so many people, even in their 50s, 60s, all the way through death, operate from a perspective of fear.
Yeah.
Which I know is why you were pretty passionate about. You talk a lot on your social media about like the FIRE movement, or call it financially independent, retire early, that whole thing, and how to have people be just financially independent. So like, was that a big portion of why you wanted to put that out there and kind of give back and share in that way?
Yeah, you know what? Like, I went through a really big life change in 2017. That was paired with becoming a new father and kind of having to go through a reinvention of myself. Also a very difficult year in my marriage. And all of that culminated with the realization that my entire life I focused on myself. It was very selfish, very driven, but at the core of it, I was about myself. And as I started really trying to unravel that, kind of the realization hit, and then I had to start answering tough questions. And what I landed on was, this is not what I'm called for. Like, this is a behavioral trait that I need to fix, but I'm not on this planet to just focus on myself. And in that, I really started reshaping my social media and wanted to have it geared more towards giving back as opposed to look what I am and look what I could do. And so I just started mapping out kind of the key pivotal moments in me over the last 15, 20 years and tried to just put it out there to see if anybody else was struggling with it and share what I did. And, if it helps, take it and run with it. And that was a big one, right? Like, fear is a very powerful tool. It really is. And you can use it, to give you good outcomes. You can use it to really hold yourself back. And I, thankfully used it for the good, but knowing what I know now, I wouldn't have done it that way. I don't think we're called to be fear-based. I don't think we're called to make decisions in fear. It took me a long time to get there and understand that, but I'm not going to lie. Like if you're a fear-based person and that creates action out of you, that can bring a lot into your life. It's a very powerful forced action tool.
Yeah, 100%. Yeah, I know I've heard you talk about it a little bit, but just like, I assume what you're describing is basically your transition into, your faith, right?
Yeah.
Yeah. That's awesome. That's incredible.
Well, that's what it led to. But, when I kind of to give everybody caught up that doesn't know my life, I was a pro skateboarder for 13 years. I traveled 6 months of every single year, and I started having kids with my wife. And so I had a 2-year-old and a 4-year-old that I saw half the year. And then when I stepped away from my skate career, when we sold our business, I got hit with a lot at once. I got hit with identity. I got hit with purpose. My wife was miserable. And if I was being honest, wasn't really a good dad either. And so I had to make some big decisions. And in that, I felt lost. Like I felt like I didn't know up from down. And what that led to was, a 6 to 10 month journey of trying to rebuild. And I actually wanted a foundation that was solid. I was so sick of feeling like there was nothing at the bottom. And if I got rattled, it all broke. And so that was the inevitable outcome for me. Is like, okay, if I'm actually going to build something of substance, and if I get hit with like a very difficult moment, how does it not all come crumbling down? That was my answer. I had to get to the point of being able to very clearly tell you why I was on this planet, the reason for it. And where I landed was, the belief that there's a creator. That creator put me here at this time. And, my job is ultimately to glorify him. And it's less about me and those around me. And ever since then, like I've been hit with some trial since 2017. Oh gosh, it just doesn't rock my world anymore. So that really, that changed everything for me.
Yeah, that's amazing. We're big believers as well. And we fail quite often, but our goal is to do everything we're doing and glorify God. And also, one of the most important things to me is my wife and my family.
Yeah.
So, I understand what you're saying completely. And I feel like it's sad for a lot of people out there who don't know that, no judgment at all, because everybody's been there. But if you don't know that, it's easy to feel hopeless when things are happening, or, life is going to happen and bad things are going to happen. And when those bad things happen and you don't have, a God to look to and pray to and want to be just to help you. Help to sustain you.
Yeah, that's right. I get what you're saying. Like it's sad for us because we know what we got to experience after it. So we remember kind of walking through life challenged, right? Or you could say hopeless or having anxiety. It's brutal. And just for anyone listening, like I'll tell you straight up, like you might be hearing us and go, I'm not into that. I have tried everything. I did all the motivational stuff, the journaling, the manifestation, all that stuff. It is a fake It's a fake or a synthetic version of what we're talking about. It never got me to where I truly wanted to be. So I would recommend giving it a shot. It changed my life.
That's amazing. So how do you, I wanted to get into that, but we got into it early. I love it. How do you incorporate that into your business now?
Well, when done right, I hope to be an example to everyone we work with, whether it's my partners, our team, brokers we're working with. I ultimately want to be an example. And, in our industry, there's things that people do that are shady. There's things that people do that are not honest. And we try to be different than that. So if we, and this is a point where I might get criticism for, but if we agree on a deal, we're going to honor our word on that deal. We're not going to retrade you. Retrading is a very common thing you see in the world of commercial real estate or investing as a whole. Now, that doesn't mean that if we were given certain information and then we look at a project and that project does not reflect the new info, that is up for grabs as far as, trying to get a deal done. But if we tell you we're going to do something and these are the terms and you try to retrade us, or we get put in a better position where we feel like we have leverage to retrade you, we're not going to do it. So that's probably the first example I think of.
Yeah, just having integrity and being an example to other people. Yeah, that's amazing.
That's right.
I actually was talking about that with somebody, I think it was about a week ago, about retrading. And they were asking me like, oh, should I do this or should I do that? And yeah, we're kind of on the same page of where, if you agree to something, you're not going to try to retrade them. However, if you do your due diligence and, a $40,000 problem pops up or something that was not disclosed and wasn't expected, then it's perfectly reasonable to be like, hey, maybe I don't expect you to pay this full $40,000, but we weren't expecting this. What can we do to have something to work out a deal that's reasonable?
That's right.
Yeah,
that's right.
Yeah. And what you can do to prevent that too is like a pre-retrade, if you will, of like, this is going to be an issue before you go under contract, get an agreement, say, hey, go ahead and give us the seller credit for it, or you guys can take care of it and we'll give you the price, and kind of like fight it up front.
Yeah, there's ways to get creative for sure. Everybody who's new, you just need to know is what you see on the front end is typically a snapshot and is going to leave out a lot of information. Just getting your hands on a T12 that has enough to change everything. So do not buy a piece of real estate without an actual historical income statement, because a lot of times whether it's the NOI or whatever income ratio they're giving you, it's not accurate. So you need to know what you're getting before you get in.
100%. There's a phrase it's sad, but it's definitely true a lot of times. Not always true, but people say sellers are liars. And a lot of times that's true. Yeah. A lot of times it's true. So I'm curious, going from, you exited, you had a very successful exit of your St. Archer's business, which is awesome. And then you pivoted into commercial real estate. And I know you said you had been investing in some limited partner, as LP into storage deals and stuff. Is that what made you think, okay, this is going to be my next venture? Because it takes a lot to go from, I'd imagine running a brewery and everything you did, it's a business for sure, but there's a lot of similarities, but it's different than commercial real estate. And commercial real estate is a very, takes a long time to learn. Yeah. So it's cool that you were able to just hop in and hit the ground running in developing, let alone, because you do a lot of development work, right?
We do. Correct.
And that's the most difficult commercial real estate form there is. So walk us through that.
Okay. So when I was investing in storage. I started investing in some debt funds as well. And why I liked it is it achieved really what I wanted in my 20s and 30s, which was I wanted some income because I needed to become financially free. But two, I was young and I didn't want to sacrifice wealth build to get a 7% yield. And so I love that with real estate, I could capture both. Now, that doesn't mean I knew I was going to start a real estate firm after the brewery. What I was trying to figure out in the beginning was I had a model that worked in craft beer. And to kind of give you a quick snapshot, we found a way to disrupt a broken or an outdated industry and make it current. We did that a lot through our brand, our storytelling, using social media, and ultimately building like a hot community that felt like they were part of us when they drank our product. Right? The beer industry hadn't seen that before, and it moved everyone over to what we were doing. And so after we exited, the two things that were going through my mind is one, how do I do something different? Because I felt like lightning striking twice was going to be very hard to achieve. And two, what industry out there could I apply my model to that will put me in a position of potentially disrupting? And that took me time to land on. The third kind of question that brought the whole thing together was I was trying to figure out how to replicate my situation for my friends and family. Right? I was 34 years old. I was financially free. It was the coolest kind of, at least from a financial standpoint, to not have to figure out where to work or how to make money. And so when I kind of tried to reverse engineer it, I love that I, did the business. I loved all the investments I was making, but real estate was the big part of my portfolio that I was like, this stuff is always here. It shows up for me. And so I was like, you know what? I like the asset class. The industry itself is prehistoric. It's so old school. This is it. I can disrupt here. And so I came up with this concept to build this brand, and the brand, I wanted it to be around community. I wanted it to be this idea of strength in numbers, that we're all going to come together and, build our wealth. We're going to high five together, or we're going to be bummed together. It was very much a team kind of mentality. And then I wanted social media to be the avenue for people to connect and people to invest. And then lastly, I wanted to create a brand that the youth thought was cool, right? Like no one cares about Gen Z or at that time millennials when it comes to investing because they think they have no money. And so I wanted to create something that they looked at and went, damn, multifamily is actually cool. Or storage, the most boring asset class out there, is actually cool. And so I built out my business plan, and this is a long-winded way of answering your question. I had a page on there that said fund and then a question mark because I didn't know what funds were. I didn't know how to manage funds. But with my last business, what I did know was how to operate a business, how to launch it, and how to raise money from investors. And so I started bringing my business plan to relationships that I had inside of the real estate investment world, and tried to go through an educational kind of process. How do I do this? Who do I need to hire and bring onto my team to build this ultimate vision? And one of my longest mentors, who gave me the introduction to the storage I was investing in, said, hey, dude, I want to be a part of this. And that led to 3 of us starting this company, 2 of my partners having 35 years in commercial real estate and development. And they helped kind of take over that component of the business as I tried to build, the total brand. And then it didn't take long, being a very obsessive personality, for me to know what I was doing. Probably the first year leading up to launching was the educational part. And then, we jumped in, and now 10 years later, I know what I'm doing now.
Yeah, that's incredible. So one thing that it seems like it's a theme with a lot of successful people we interview, and it's an obvious one, but I read the book earlier this year, Who Not How, when the principles of, bringing people on, having super who's and all that stuff. So it sounds like you really used that and brought on quite a bit of team players, especially early on with your real estate business. So how important is it to have the right people in place and have a team around you?
So it really depends on what your goal is. If your goal is to build a business that maybe generates $1 million of revenue, and you don't want to manage employees, you're just a solopreneur, and you love working all day, every day, well, yeah, don't build a team, right? But if you want to build anything at scale, and your goal is to build a company that runs without you, you have to bring people on. You have to learn how to delegate, and you have to learn how to manage correctly. You have no other option. So, I know that now, having, built companies over the last 15 years. I didn't understand that when I started my first company, but what I did understand is that I know my strengths and I know my weaknesses. I'm never going to do anything if it's just reliant on my strength. And, to give everybody a little bit more flavor on what I'm good at and what I'm bad at, I'm really good at coming up with ideas. I'm really good at getting people fired up and on board to help me build those ideas. And I have an ability, for whatever reason, that when I speak, there's something in the inflections of my voice that get people to listen. I was a God-given talent. I can't take any credit for it. What I am not an operator. Nothing about me is efficient. I have to have somebody that keeps my energy in order. And so that's the very first thing I find. I find an operator, or who's going to become our COO. And then second, I'm good with numbers, but I am not the one that has any business building out pro formas. It takes me too long, and it's just a not efficient use of my time. So that's usually the first 2 for me. Who's running our finances and who's keeping us in order?
Yeah, that was going to be my question. Like, who would be the first couple of people you'd hire if you were starting something from ground up? And what it sounds like you're describing is you're the visionary, basically.
Yeah. So we use, for anybody who uses this system, we use the EOS system. If anyone manages businesses and you have not read this book, go get the book Traction. Yeah. There's other management systems out there. We've been using this in our business for quite some time. It's been very beneficial. So for those that know, I am the visionary. One of my partners is the integrator. We have 5 pillars of our business, and then we have our leadership accountable for those pillars. And then we track our rocks, and when we're on track, we're high-fiving. When we're off track, we're pivoting to get it back on.
Yeah, absolutely. I've read that book. It's great. The firm we work with, so I don't know if we told you before the call, me and Jesse are brokers. We're building our own portfolio on the side, and then we work with a firm called City Platte in North Carolina that is we're about to start a fund. So far, they've done single asset syndications. They have about $350 million, and it's mostly in industrial and retail assets.
Okay, so they're about my size.
Yeah, they've done. They're largely why we've had any success. Having great mentors and also people on the podcast. We get to listen and talk to awesome people like you. So it's cool. I'm trying to remember where I was going with that. With the
management systems.
Oh yeah, EOS. Yeah. So they run on EOS. Yeah. We kind of implement that with me and Jesse just as our team. But
yeah, it's good.
That's awesome.
Beneficial.
Yeah. That's awesome. Oh, I remember. So I just read a book. Jesse read it too. It's called The Science of Scaling. It's by a guy named Ben Hardy. You might have read it, or you're about probably
have it right there. there?
I thought it was. This
Okay.
one's Scaling Smart. I was like, oh, did I just? Yeah.
You should read it. It's an interesting book. So the guy who wrote Not Who, Not How, 10X is Easier Than 2X, Gap in the Gain, those books.
Oh, yeah. I've read the 10X is better than 2X.
Yeah, so it's like that but on crack, basically. It's like way more in depth, but he talks about in the book how it's like almost like going away with 10-year goals and stuff. And it's a very interesting concept. We wanted to ask you about, how you are able to do all these things. You have a bazillion things going on. I have a lot of stuff going on, but not nearly as much as you, and I struggle keeping up with it. I'm sure there's a lot of people who have trouble managing so many different things running at one time, especially doing it well. So like, how do you do it? What is your recommendations for people who are juggling quite a bit of things, especially, just family and wife alone is a lot of time.
Okay, I'm going to tell you how to do this well. And specifically, I'm going to tell you how to do this well if you're a visionary extrovert and you are not good at managing time. I am not good at managing time, just so everybody knows. But I have discipline. Like you got to have that side. So what I do, number one, I have a wall. I have somebody, her name's Tawny. You do not get to me without going through her. So I have put somebody in place that is my filter to make sure that who I'm scheduling time with fits into what we have decided is important. So that is the first part. Who gets access to you? What has to be done in order for you to say yes? Then if you get that structure correctly, you can either put a person in place or you have to operate in, keeping true to these are the things that are priorities for me. These are the things that I'm saying no to. The reason why I need somebody to do it, you will get to a point where you can't manage everything. That actually happens sooner than most people realize. So I would highly recommend if you don't have an assistant, get one. It is a game changer. How I separate my time, just so everybody knows. I spend Mondays, Wednesdays, and Fridays on the big picture stuff. So if I get this done, it really, really moves the needle. And those are done in big time blocks. So I typically only have 2 time blocks on Monday, Wednesday, Friday, one from 8 to about 11:30. I go eat lunch. I pick back up at 1. I leave here at 5. There are no meetings booked with me on those days. Tuesdays and Thursdays, it's meeting from start to finish. 30 minutes from 9 to 5. I go home exhausted. I feel like I got nothing done, but I really did. And then 5 o'clock to, time I go to bed, there's no work being done. That's time for the family. And then Saturdays and Sundays, I am a no for business. That time is for the family as well.
Yeah.
That's incredible. I feel like, did you pull that from 10X is Easier Than 2X? I can't remember the words they use, but they talk about like your, basically days where you're like almost like prospecting and stuff. And then the other days are like your admin more type days. And they talk about having really big time blocks.
You know what? No, I got that one. I started fine tuning it actually from Hermosi.
Oh, wow.
Yeah. I was kind of running off of this. I need time for creative and vision, and then I need time for to-dos. And I was operating that pretty good for a few years. And then we got to a point where, I say this humbly, there started becoming a large amount of people that wanted to work with me, talk to me, do something with, and it started getting overwhelming. And so I had to kind of really hone in on what it is we're trying to get done. And somebody was like, dude, check out this video that Hermosi made. And he made a video that articulated what I was attempting to do very well. And so we started tracking the time I'm spending even in those blocks more efficiently. And then we started reassessing every quarter to potentially every 6 months to make sure that what we decided was a yes and no prior is still in play. And then I try to the best of my ability to kind of audit the things I did that day and try to find things that I don't need to do again so that we know moving forward this doesn't work. And so, for example, every month we do an investor kind of experience night. And lately we've been doing poker nights. And so we did a poker night last night. I'm a guy who goes to sleep early. I didn't get home till like midnight. And I woke up today and had an investor call at 8. And then my day today is freaking a lot of talking. And so I called Tawny this morning and I was like, Tawny, there's a new rule to my calendar. If I have an investor event that night, my next day doesn't start until 10. And so I'm trying to audit it, in real time. So, but that helps. That allows me to do everything I'm doing and not drop balls. Without Tawny or, somebody to help me manage, I'm not very good at this. I'm just not. I drop a lot of balls without her.
That's awesome.
I feel like we can distract ourselves in so so many different ways when it comes to email notifications or just like, like you mentioned a lot, meetings and stuff. So how are you devising the time blocks? So let's say you're doing city council, right? But you're also, working on Commune Capital. Is there like a time block for the city council work? Is there a time block? Like, how are you dividing the different pillars or the different priorities into different time blocks?
Really good question. So I have Tawny at Commune, and then I have an assistant with the city. And basically what I do is I create the boxes for yes and no with Tawny. And then I have Tawny working with Katie, who's my assistant with the city, to figure out kind of how to then add the city into my schedule. Because with the city, I do have non-negotiables. There's certain things that I have to be at. And so we try to stack those on the days that are dedicated for typically more meeting-based days. And then when I have kind of one-offs, both of them are in communication. And then sometimes I have to step in and actually give guidance on if I can do that or not. Other than the city, though, it's very rare for Tawny to have to come to me and ask if this is okay. She's now been with me long enough to know what I'm going to say yes to and what I'm going to say no to. Another thing, it feels a little bit uncomfortable in the beginning, but it's very important. When I went through my priorities of what we're focusing on and how somebody says a yes or no, sometimes what's going to happen is somebody's going to give you a call. And this is the most common one I get is, hey, I want to connect you with Johnny, and I just think you guys have synergies, right? I'm telling you right now, I hate everything about that. It happens so common. I do not like when people do that. And so what I then had to learn how to do is say, go talk to Tawny. And then I've told Tawny, I want to know why you want to meet with me, how long, and I want to know what your desired outcome for that meeting is. And if that desired outcome does not fit with our priorities, it's a no. And so we really had to get discipline on that. I felt like a dick actually when we first implemented it. But when you get to a point where you're starting to view time as valuable, you can't just go burn an hour any longer to connect with somebody who has nothing to do with anything you're going to focus on, but wants to talk about it no longer becomes a good use of time.
Yeah. Here's a question for you. You're a believer, obviously, and there's things that pop up where you feel like, you almost feel like you're called, like, oh, I should talk to this person. You feel like the Holy Spirit talking to you. So how do you manage that? Like if in like, I guess, when you're face to face with people, you might go talk to them and make an exception, but like, how do you manage that?
Okay. Great question. I typically leave from 3 to 5 o'clock on Fridays open for that. That's a big one actually that my wife had to remind me of. As I started implementing this structure, I started getting calls from friends, from investors who have kids. And a lot of them, would say, hey, my son or my daughter's in college. She's trying to figure out what to do. I would love to connect you with them. And that didn't fit into the priority stack. And it was my wife that reminded me exactly what you just said, Mike. It can't all be about business. Like you got to free up some time to give back because you got that as a kid. And it was huge for you. So that's how we fit it into my schedule is, we have a block that if it doesn't get filled, okay, Friday afternoon will be spent on the business, but it's there so that if anybody reaches out and it is on some type of mentorship or kind of trying to help, that's the window that it's done. And then the other thing, man, that's one thing I ask for and I try to do it every morning is like, Lord, if there's somebody that you're putting into my life that you feel is important, will you remind me every day that is the priority? And so sometimes that might throw the schedule a little bit off, but at the end of the day, I try to operate in his plan for me to the best of my ability. And you're right, like that is one that is probably the highest calling in general.
Yeah. That's awesome. That's cool.
Great question, Graham. I had a question about competing goals. So it kind of seemed like, and correct me if I'm wrong, Mikey, if I'm wrong on this, but you were very focused on skateboarding. You wanted to learn more about education stuff and financial education. You focused in on your business, the brewery business. And then once you sold that, you were focused 100% on commercial real estate. Is that accurate?
Yeah, that's correct.
So the reason I'm asking this is because I have a glove company and Graham has been annoyingly challenging me all the time on it. I appreciate him pushing me on this, but so.
Is it like a golf glove brand?
No, it's a manufacturing gloves. So it's for people that work in factories making, steel manufacturing, that kind of thing. I've got a lot of opportunities, working with Fastenal. I'm working with a couple of other like large companies on this. And I'm also doing commercial real estate. And me and Graham have got a lot of momentum on that, doing this podcast, and some other things that I'm cutting out of my life to focus on. And there's a lot of people out there that try to do multiple things at the same time. What's your thoughts on those competing goals and how to manage them?
When you say say Graham is giving you a lot to think about or challenging you. In what way?
He's asking me, like, would it be best for me to focus on one for the moment and then blow it up and then go exponentially growth wise in the next year or so? Because commercial real estate is always going to be there, but my glove business may not always be there. Do I take the time away from commercial real estate on a active broker side and full go all in on my glove business, and then once I sell that or keep it or whatever, move the money into commercial real estate?
You want the hard truth?
Sure.
You go all in on one thing, you ditch everything else. No doubt about it. No one will build anything of substance without going all in. And look, I get this one. As an entrepreneur, we feel like we can do everything. Yeah. And it is so common for you to do too many things poorly as opposed to one thing great. And so how to do this correctly? You go all in on the biggest opportunity. And if that's the glove business, you're all in on the glove business. You put real estate completely on hold. And then you will get to the point where if you want to do multiple companies, you are not driving the company any longer. You are finding the CEO and the leadership team to build that company out, and you will move to being a board member and a owner, potentially decision maker of that company, but you are not putting your time into it. That is the only way to build multiple companies well.
Yeah, that's kind of what I was thinking. And obviously it sucks because if you picked the glove business, me and him we'd still obviously be friends and be great best friends and stuff. But I was like, man, because I read that Science of Scaling book, and that's basically what it says.
Yeah.
It basically says if you want to grow exponentially, you have to ditch everything out. You said the premise of the book without reading it. Yeah. You have to ditch everything else. And it's like, if you want to keep growing regularly, like other people, sure, you can do multiple things at one time, but you're never going to blow anything up.
100%. 100%. It's actually such a good point. Look, business is hard and business is competitive.
Yeah.
And if you and I are in the same space and you're doing it on the side and I am all in, I'm beating you. No way around it. And so you just gotta, that I think should be how you kind of view this.
Okay.
Am I here to win? What am I doing here? Am I here to win? Okay, then I'm going to play the game. If I'm not here to win, don't even bother.
And it's tough too, because you ask other people that advice, and most people aren't at your level or other people's level who are insanely successful. And so it's great to hear the reinforcement from you because you're at another level. Hey, it's Graham here. What if I told you could actually start your commercial real estate journey today? Not next month, not next year, today. That's exactly why Commercial Academy created Fast Track. And honestly, this is a breakthrough you've been waiting for. It's designed for people who are tired of waiting and ready to jumpstart their investing career without wasting time or money. With Fast Track, you'll get instant access to J. Scott Shields' home study courses, decades worth of real world strategies recorded by Scott himself and broken down into lessons that you can watch anywhere. You'll get their powerful underwriting software that makes analyzing deals fast and stress-free. Seriously, it's like having a commercial real estate expert in your pocket. And get this, your Fast Track membership includes a free ticket to the next Commercial Academy live event. Imagine learning alongside hundreds of motivated investors who are all making moves and proving that it only takes one deal, one time to change your life forever. Ready to stop sitting on the sidelines and start building real wealth? Text Fast Track to 888-653-1199 right now. Again, that's Fast Track to 888-653-1199. Fast Track isn't just a program, it's your launch pad into the deal-making world of commercial real estate.
Hey guys, what if I told you the fastest way to your first $1 million deal was sitting right in front of you? It's not hype, that's Fast Track, Commercial Academy's brand new game-changing program. Here's what makes it incredible. You get instant access to Scott Shields' library of education courses, and we're talking decades of proven strategies all recorded by Scott himself and packed into on-demand training you can start tonight. You'll also unlock their exclusive deal analysis software that spots winning deals with confidence and fast. And here's what blew my mind. Every Fast Track member scores a free ticket to the next Commercial Academy live event, saving you literally thousands of dollars. That means you're not just learning in isolation, you're networking, meeting potential partners, and sitting in the same room as Scott and hundreds of investors who are already crushing it. Now, this is the shortcut you've been waiting for. Don't just watch other people succeed, make your move and prove that it only takes one deal, one time to change your life forever. Text Fast Track to 888-653-1199 right now. And again, that's Fast Track to 888-653-1199. Your first deal is way closer than you think, and Fast Track is exactly how you get there.
Yeah, that's really important. And honestly, it's a good thing to actually highlight. You have to be very careful with who you ask advice from. You got to be very careful with this. Do not ask advice from anyone who has not done what you're attempting to do. And usually what we do is we ask friends and family, and they end up giving us advice, they care about us. So that's important, but they don't give you the advice you need because they've never stepped into the thing you're actually attempting to do. So if someone has not built a business, do not ask them for business advice. You got to be pretty disciplined on who you ask for guidance.
Mm-hmm. Yeah. I got a question for you, for myself. So like we were doing like a residential Airbnb duplex, right? And then we're doing commercial investing where we're buying small warehouses. And then we're helping the company we work for buy large warehouses. And then we have this podcast and I'm trying to do social media stuff with YouTube to grow my presence. And then I'm also a broker. So, it's all under commercial real estate, but at the same time, it's kind of challenging. So like, I definitely enjoy the acquisitions of my own stuff and, stuff for the company I work with the most. And I feel like that's probably what's going to move the needle the most, but also brokerage pays the bills right now. So it's what do you think about, do you think those are all similar enough to be my one thing? Or do you think that's stuff I should dissect?
Okay. So there is a time where you have to do more than one thing because there's income constraints. Right? Yeah. Like, dude, sometimes you're working till 3 a.m. every single night because you have to get the new thing off the ground. So you just might be at that stage where, I want to build my social media. I'm I'm acquiring industrial and I'm going to be working kind of twice as hard and taking on a lot of extra work to build the brand while I kind of sell real estate or acquire real estate. Probably the area that I would maybe look at fine tuning is commercial real estate is too broad. It's way too broad. Mm-hmm. I would pick one singular asset and one singular strategy. So if you're in storage and you're doing value add and it's light value add, that is all you're doing. Don't do any deep value add. Don't do any construction. Become the master at light value add storage within a certain kind of, whether you want to call it square footage or certain amount of units. For me, we were all in on storage first. And we got our storage portfolio to almost a couple $100 million. And, I think 10,000 units we had. And then we started building out multifamily once we had storage absolutely dialed and we felt like we were the best at it. Then you can start putting bandwidth towards the next asset class. But I would wait until whatever the current thing is that operates without you. Once it operates without you then you can put time towards the new asset class, the new vertical, maybe a whole different business, but I would wait until then prior to doing it.
Yeah, that's exactly what I was thinking. It's like I'm going to have to focus 100% or 99%, whatever, onto the glove business. And then once that's fully operational, got a CEO in place, have a full team, then I go back to commercial real estate.
Correct. Yeah, I think that's the best way to do it. But look, I have a lot of friends. They're like, I flipped this home and I did this Airbnb and I have this quadplex and it's like two all over the place. Like I really am a big believer in mastering something. There's too many other people out there that are willing to do that. It's just from a competition standpoint, you can't win.
Yeah, 100%. I read that book and we listed the duplex we have like the next day. And
totally.
So right. But I guess the one last question about in that area is like we so far have bought, we bought 3 industrial buildings with me and Jesse and then 4 more with our firm. All of them are single tenant, industrial buildings, less than 20,000 feet. And I feel like we're definitely by no means masters in that, but I feel like and it's all in the same market, by the way. It's all within like a mile of each other too.
Yeah.
And so I feel like we know that area very well. We know the asset very well. We know the numbers and what works and what doesn't, but at the same time, it's single tenant. So like you said earlier, if one person moves out, then, it's a heavy carrying cost. So do you think we should double down on that? Because I'm tempted to double down on that and just have, hopefully 6 of the buildings performing. And if one goes out, the other ones can hold it up and be the expert in that until I get it to a certain level. Cause that's definitely appealing. And I like that, but it's also like I could switch into multi-tenant industrial buildings or small bay flex or something like that.
Well, I look, your intention, I think, should always be a little bit of scaling. Like, how do I scale a company correctly? And usually what you see is whether it's a certain revenue or a certain, in your case, amount of properties, you get some efficiency of scale and you get some protection when, vacancy increases. I would say if you like singular tenant industrial better than multi, and there's pros that are leading you into that focus, well, then your goal is just get more units online so that, you can cover yourself when tenants move out. If, the benefits are the same, then there's nothing wrong at getting yourself to the point of being able to do larger projects. Usually you have a capital restraint. Right. So in the beginning, it's like, maybe you only have $1 million to purchase, an asset. And so you're buying a $3.5 million asset, whatever your leverage ratio is. Well, maybe you got to wait till you get bigger, till you get some of the bigger stuff. Maybe if you're raising money, it's hard for you to raise up to a certain point. So you have to wait to grow to be able to buy some larger stuff. There's nothing wrong with that, though.
Yeah. That's a great point. Those are California numbers too. $1 million to buy 3.5. Everything we bought so far has been under $1 million.
Yeah, California numbers is it's high here. Yeah, I can't remember the last thing we built under $10 million. It's been a long time in California since then.
Wow. That's awesome.
Jeez.
Yeah. Talk a little bit about, cause I've heard you say it on other people's podcasts and stuff. Like you talk about how and Rich Summers, I know you know him and you've been on his podcast. He talks about it too. Like people view California as like, negative because of all the regulations and stuff. But then your point of view is like, well, and his point of view too is like, well, if we can build this stuff and we can be the guys who can build it and our competition's saying, no, I'm not going to build it. And there's a housing shortage and we're the guys supplying it. And then, and same thing with like the boutique hotels. He's like, well, if there's a bunch of regulation on Airbnbs and the only place people can stay is boutique hotels or hotels, then we're going to have the gold. Right. Talk to us about that mindset.
Okay. So this actually came from skateboarding. It was skateboarding that programmed me this way. In the skate world is very different than maybe something like surfing, right? Something like surfing, like you can go do the same thing on the same wave over and over. In skateboarding, once the trick has been done at that spot, you can't do that trick anymore on film. So you're constantly having to one-up yourself or find a different way to kind of skate the spot. Secondarily, skateboarding is so competitive that you are constantly trying to find ways to make yourself look different. So everything that was programmed into me was contrarian. That's what everybody else is doing. How do I do it differently? And when I applied that into the beer industry, that's what hit. Everybody was doing it one way. What aren't they seeing? I'm going to do it that way. And I just applied that into real estate, right? There was a trend that was happening probably around 15 to 17 where nobody wanted to invest in California. They were sick of the regulation. They were sick of the barriers to entry. They were sick that it was so expensive and difficult to do anything here. And then they started looking at markets like you guys are in, right? They started looking at the Sunbelt states, the Midwest, and when it is so easy here, I can get a project entitled, permitted, and online the same year. Oh yeah, we're doing that. And so you started seeing a lot of money flow that way. And you started seeing a big sentiment shift that California was not a good state versus what I always grew up on it as the freaking golden state, like the place everybody wanted to be. And so when I started seeing that trend, I naturally went, okay, if everybody's running from this state, what are they missing? And, how can I do it here? And then I started basically seeing this path that everything that they're complaining about is right. But that is also the reason why real estate, or maybe I should say that a little bit cleaner. It's one of the major factors to why real estate is so expensive here, right? If land is difficult to build on, it's limited, and all the regulation creates a super high barrier to entry. Well, I can make a pretty strong case that one, the state is keeping my competition out for me. And two, just based on natural population growth, if there's no housing being built and the population is growing, what's going to happen to rents and what's going to happen to cap rates? And so I went all in here. And so far, I've been right. So, you're starting to see a shift though. You're starting to see investors kind of look back and go, dang, did we miss it? But so much of their money is tied up in distressed properties right now that they can't move. So we're in a pretty unique and fun window here.
Yeah, that's awesome. That's super smart. I mean, you definitely had a lot of you saw something that a lot of people didn't see, and that's impressive. Because I wouldn't have looked at that. I mean, from the outsider's perspective, we hear about California, and like you said, you hear that it's beautiful, the weather's great and stuff. But then you hear the it's expensive as crap and everything else. Right. And we got so many calls during that time frame you mentioned. I got every day was multiple calls from a New Yorker or somebody from California saying, "Hey, we want to invest in North Carolina. We want to buy multifamily or whatever it be." It was nonstop. That's cool though. I'm excited. We're coming to Newport Beach, California next month for a mastermind. It's like a small bay flex mastermind.
Oh,
it's like only 2 days, but the guy's name's Saul. I'm not sure how to pronounce his last name. Z. Saul Z and Alan Schnur are their names. Yep. We've actually had them both on the podcast, and they have like a little small, I think it's like 30 people mastermind. Epic. Really excited.
Good. Yeah. Hit me up when you guys get out there.
Yeah. No, we absolutely will.
You know what? As you're saying this, I'm just going to say these two things as they came to my head. One, I remember having to find a way to market what I was doing, knowing that investors didn't like California. And so I remember in the beginning, like I would go straight at it. Like, hey man, just so you know, I think investing in the Midwest and Sunbelt states is the stupidest thing ever. And if you are somebody that feels comfortable investing with everyone else, I'm not for you. Like I had to be so like, hit them in the freaking face on the front end to like actually have the opportunity to talk about California. So that was definitely hard. The other thing I'm going to mention is I do believe that the opportunity is where other people aren't seeing. And that is where you should focus, but you should know that if you're in that kind of position where you're doing something different, it is very difficult because most people will tell you you're crazy. Yep. And when you're talking about opportunity, it's very easy to get in your head like, am I missing it? Am I nuts? So just be prepared for that. You will hear way more people tell you you're crazy. And then about 3 years later, you're going to see people ask how you're doing this. And then 5 or 6 years later, everyone's going to be doing what you're doing. You're going to have to do it again, find the new thing.
That's awesome. Yeah, it's so interesting you say that because we just got back from a conference this last weekend of commercial real estate people. It's called Commercial Academy, and it's like maybe 200 people. And a lot of them would get up and present on deals, and a lot of the deals were in like the Midwest area. And they were talking like the numbers and all this stuff. We're like, wow, that does look. It's easy to be tempted. Like, wow, that looks good. You know, those numbers look great. But then I was talking to one of the guys like, hey, we bought this deal. The numbers were amazing, and they did very, very well on the deal. But they were talking about how long it took to find a tenant. It took a very long time. And I was like, well, I guess that's part of it. You buy something cheaper, but maybe the demand's not as strong. And then somewhere like we're at and you're at, you might pay more for it, but because it's such a popular place, it's growing, then you're going to have more tenant demand. So there's pros and cons on all of it. Yeah. And I feel like you're saying, picking somewhere and sticking to it is really one of the most important things, regardless of where it is.
That's right. Yeah. And to Mikey's point, with my gloves, we're doing something that only 2 or 3 other companies in the world that are doing, right? And so everybody told me I was crazy. A lot of people said it's not going to work. Then I started to get some people that were interested about it. Now it's starting to grab a little bit of attention, and I'm still getting I can't remember what you said in the 3 to 5 years where you start to get a little bit of traction and everybody's like, how are you doing this? And it's a good question. I don't really know. I've just been able to string things along, but it's so true.
Jesse,
people are going to tell you.
Jesse, I want to see tomorrow morning on your LinkedIn that you are 100% the founder, CEO, and visionary or operator of the glove company. Because what you just said is actually more of a strong case for it. Yeah. There's only 3 companies right now doing it. Why would you not ride that wave? Because next year it's going to be 10. The year after that is going to be 20. This is your window, if that's the case, for you to go as fast as you can and grab as much market share as possible. Yeah,
I'm excited. I'm going to go to, right after the Small Bay event next month, I'm going to the National Safety Convention, and I'm just going to go to door to everybody in the safety world and show them exactly what we're up to.
I love that. Good for you, man. I'm excited for you.
Yeah. Thanks, Mikey.
We're coming up. And Graham, that doesn't mean that you guys aren't going to still do massive things together. You're going to be freaking I'm just hearing about it. This is only the beginning, big dog.
Yeah, I appreciate that. I really do.
You're like, I'm never doing anything with you again. You're out here trying to talk my friends off to
no. I literally read that book and I walked up to Jesse and I said, you got to read this book. Yeah. And this is going to cause a problem for you. And he before he even said anything, said, I can do 2 things at one time. He knew exactly what I was going to say. So like, I knew it was like going to stink, but also, I knew it was like, I was like, I'm one of his good friends. I'm like, dude, you got to do it. It's got to
I think the better word is sting, not stink, unfortunately.
Yeah. But it's all good. It's all good. I think he's going to do phenomenal.
That's good friend behavior right there.
Yeah, for sure. Awesome. I'm sure you're insanely busy and it's coming up on an hour. So, we'll finish up here. Just kind of one of the things we always like to ask, if you were to tell somebody who has no experience in commercial real estate or no experience in real estate, or maybe they have residential portfolio or some experience in residential investing and want to transfer into commercial real estate, what would be the best advice you could give them just starting out?
The best advice I could give you is I think you have to have a pretty big why behind what you're doing. And if the why is I want to make money, you're going to break under pressure. And so I would have a pretty strong why. I would have a pretty good end game in place of what you're trying to achieve. And then once you have that established, you got to be pretty real with asking yourself, if the bottom falls out and this industry goes to hell, am I still gonna want to be here and grind it out? And if the why is right, you'll be willing to go through, walk the ends of the earth to pull it off. If you don't have a solid why though, you're going to hit trial. It's inevitable. And you don't want to waste 3 years of building something just to hit year 4 and go, I hate this, and move on. And so that would probably be my biggest recommendation. Spend time almost building out a business plan for your life and what you want to do and who you want to become. And just remind yourself of that constantly.
That's great advice. That's great advice. Awesome. Well, Jesse, do you have any last questions for Mikey?
No, I don't. I think this has been a phenomenal episode. I appreciate your insights and the advice that you've given both of us today. I really do appreciate it a ton.
Yeah, seriously.
Thank you guys.
Yeah, this was a pleasure to hang out with you guys. Appreciate this.
Yeah, for sure. And if anybody wants to, find more out about you, I mean, they can Google you, but what's the best place for people to kind of connect with you?
If you're on social, just pick the platform, put in my name, Mikey Taylor, and you'll be able to find me. And then on those, you'll have access to anything I'm doing.
Awesome. Well, you guys heard it here first.
Oh, you know what? I'm going to use this. Actually, I'm going to use this opportunity, if you don't mind, to give a little plug.
Of course.
I also have a podcast. It's called Life with Mikey. It's on all of the podcast platforms, or if you're visual, we're over at YouTube, just on my channel, Mikey Taylor.
Okay. Oh, awesome. I actually did not know that. Have you posted that on your social media stuff, or?
Yeah, this is a humbling moment. I got to step that up, apparently.
No, I think I probably just saw it and thought you were like on somebody else's podcast, if I had to guess.
That's
incredible.
Means I have opportunity to increase what I'm doing.
No, that's awesome. No, I'm going to go check it out for sure. I'm going to go listen to it.
100%.
Thanks, guys. I really appreciate it. I'll talk. Hey, hit me up though when you guys are down here.
Yeah, absolutely. Thank you so much.
Yep.